all your checks. And your deposit slips. And paper and electronic statements. Now, I don't get paper bank statements in the mail, but I still balance my checkbook every month, but I do it using the online statement just because I opted to not receive any paper from my bank because it's better for, the environment, whatever. This is your identifier. And they don't go by names because some people have similar names, and so it's by account number. And you may have more than one account at the bank, and so you'll get a different statement for each account number. The bank statement is basically it's a list of all of the transactions. Typically, almost every bank, it's 1 month. And it's usually, it may not be a calendar month as in like the 1st to the 30th. Most banks will do that, or the 1st to the 31st or whatever. Some banks, though, will go like the 15th to the 15th or something like that. But it's about a month, give or take a day. It lists all of the transactions, and it also lists the dates. Your starting balance is the amount of money in the account the day the statement period started. Oh, yeah. Sorry, this is called a statement period. The amount of time. Okay, so it's the amount of money in the account the first day. And this is the amount of money on the last day of the statement period. And okay, so let's say my bank statement period starts on the 1st. If I look at the balance that the bank statement says I have on the 1st, it may not match the balance in my register that I think I had on the 1st because of things clearing at different times than when I wrote them down. But this is what the bank said you had in the account the first day and the last day. Outstanding deposits are deposits that you've made that haven't shown up on there yet. Generally speaking, that'll be like if my bank statement period ends on the 30th and I make a deposit on the 30th, but they've already printed the statements and mailed it. Or I make a deposit on the 1st or the 2nd, but I don't get the statement in the mail until several days later. I've made the deposit, but it doesn't show up on the statement. It's outstanding checks are technically, they're checks, but they're any kind of transaction, purchase that has not shown up on the statement yet. So it can be a check, it can be an ATM withdrawal, it can be an electronic funds transfer. You go to the gas station, you use your debit card to fill up your car, anything like that. But we just call them all checks. Balancing a checkbook is also called reconciling. So those two words are interchangeable, and so that way you understand if I use one or the other. Basically, it's verifying the information. Okay, so it's verifying the information to ensure that no mistakes have been made. And now this can be from your end or the bank's end. I will say that, 98 times out of 100, the mistakes are on the people, not on the bank, because the bank is all done through computers, and computers don't usually make adding and subtracting errors. However, it has happened that I know of that someone wrote a check for, let's say, $100 or $12.57 or something, and it comes out of their account as $125.70 because it got keyed wrong and the decimal was one place over. Something like that. It can happen. So you do want to balance your statement, not only to know if you made a mistake, but also to catch if the bank made a mistake. And that way you have like an accurate accounting of what's actually in your account. Like, you don't want to think you have more money than you do and then you go spend it, except you don't actually have it there. So you're comparing your bank statement to your register. Now, if you don't keep a register, you can't balance, so you can't compare, so you can't catch mistakes, possibly. So that's why keeping a register is really important. All right, so to reconcile the bank statement, you look at your statement and you look at your register. Okay? What we have here, these check marks on the register indicate that these have already been accounted for in a bank statement. Once you've seen something on the bank statement, you put a check mark next to it, and then you know it's been accounted for. So I'm going to go back and forth between these. I have a deposit for $35. So I'm going to find a deposit for $35, and I'm going to put a check mark. I have a deposit for $100. Check mark. I have a withdrawal, which is check number 1770 for $158.08. So 1770, $158.08, and I don't just check that, oh, here's 1770 and check it. I check that the amounts match. Check number 1768 for $46.50. So 1768, $46.50. 1769 for $74.64. That matches. And then 1765 for $19.50. 1765, $19.50. Okay, so now what I have, this, and this, these are not cleared yet. So they're not showing up on the statement. So what I do is, the first thing I want to do is I add up my outstanding withdrawals. Okay, so I have, oh, also I forgot this one up here, Deepdale Country Club. So I look at everything that's not checked off in the whole register, and I look at all the withdrawals and I add them up. So I have 50, I come down, I have 18, I come down, I have 29.10, and then I come down and I have 15. And when I add that all together, I get 112.10. Okay, so these are withdrawals that haven't shown up yet. And then I take my outstanding deposits. Okay, well, I only have one outstanding deposit. That's this one for 125. Okay, so these are the things that I have in my register that have not shown up in the check bank statement yet. Okay, my statement deposit, or sorry, statement ending balance. If I go back here, the ending balance, I apparently didn't type it in there. It will say on there somewhere ending balance, and if I had typed it in properly, it would be there. And there was a starting balance of something that was up here. If I had typed correctly, it would have shown up. So it was 628.23. Okay. So I take my statement ending balance. I'm going to add outstanding deposits. And I'm going to subtract outstanding withdrawals. So I take my balance from my statement, I add 125, and I subtract 112.10. And when I do that, I get my revised statement balance, which is 641.13. And what I want to check is that these two things match. If they don't match, there's a mistake somewhere, and we need to find it. Now, it'll either be a mistake in the bank or it'll be a mistake on yours. Sometimes things happen, like, say I wrote down $15 here, but it was $15.25. That would have been my mistake. Or, well, it wouldn't show, like, it would have to be one that cleared. Okay, so this is, instead of 74.64, maybe it was 74.94. So I'd be 30 cents off. So I need to go fix it. Does that make sense? All right, so if we call we have a statement ending balance. I'll call that A. And then I have total outstanding deposits. Deposits is with a P. If I call that B. And then I have total outstanding withdrawals. And I'll call that C. Okay. A plus B minus C will give me my revised statement balance. And then this needs to match the check register balance. And it's really important that when you're doing this that you do check off the things that have shown up on statements, because once they've shown up on the statement once, you never have to really think about them again. They're cleared, they're done, they're good.